All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, July 24th. I'm glad to be here with you, and I've got some good information for you. This week we have the largest S&P 500 earnings week this season. And that just means the second largest one is going to be next week. So the largest earnings week is for the earnings season is this week. Next week will be the second. But we have a problem with earnings for the S&P 500. What is it? What is the problem we have with the S&P 500 earnings? Someone tell me. Getting weaker. Good comment. Yeah, that is correct. What else? And you can go ahead and shoot anything out you want to. I mean, really, I'm doing this for you guys so that you have an idea. Inflation's going higher. That is also true, Mary. Lower expectations for the near future. Agreed. Yeah, I mean, the problem with earnings is year over year, earnings are down a negative 4.4%, while inflation is 4% higher this year. Let's call it what it is. If you were to ask me, it's, let's just put it this way. There is a huge disconnect in the economy versus the stock market. There is nothing. Where is, my James aren't here. Normally Kohler's here, but we have a problem. There's a huge disconnect between the economy and the stock market. Bonds are going higher, stock market's going higher. There's a conflict of interest, right? Economy's going down, stock market's going higher. There's a conflict of interest. And Abraham, I'm not reading your comment because you're correct. How do we have such a vibrant, how do we have such a thriving, or I'm going to say a vibrant unemployment with a thriving economy right now? How is that happening with the Fed going to town on interest rates? I mean, they have way overshot. But they've overshot because they took so long to raise interest rates, right? But what's the disconnect? Fed buying stocks. That is a good guess. That is not correct. In fact, the Fed is not buying stocks and they're dumping bonds again. Something fierce. These poor mortgage-backed securities that are packaged, sometime we will go through another mini 2008 in our mortgage. The mortgages are going to go through, and we're going to have home prices have another mini crash coming up. But actually, Abraham said it. I've been doing my research and trying to find out where it's at. I have an article here. Bear market is dying after less than 20 months as almost 10 trillion floods back into equity values. All this time we've talked about all this money sitting on the sidelines, right? Well, almost 10 trillion has been restored to equity values. Part of it's from the market coming up, but a huge amount of money has been poured into our stock market this year. It scares me because our growth should have come the back half of last year. The growth is off by about 9 months. Our growth really has come over this last quarter. Mod, it's a mixture. Some of it's institutional, some of it's retail, some of it is overseas investments or investment capital. It's pretty neat because we have a large amount of money that's come in from all over, and it really is money sitting on the sidelines. And Abraham's kind of followed this. He knows what it's about. So Abraham, if I can read that statement, excess money needs to be someplace, preferably in liquid markets, and the financial markets is the most liquid. Forex, then Forex stocks, crypto, and so forth. Yes, somehow our US markets are still the place to be. And it's still the place to be in a way that huge amounts of money has come into it. So just something to keep in mind here on where everything is at. Why is my computer running so slow today? Huh. I might have to do a little run here. Give me a second to open that back up. I think I may have let my computer sit just a little bit too long. So part of it, the disconnect. Come on. Don't want to share it. Want to manage the access. Let it not share it. Why is this not working for me today? All right, someone tell me, what am I doing wrong? Stupid thing. Blame the computer, slow down on BG&E. Why is it just not working? All right. So the 10 trillion has made a dent into the stock market. And there's one other problem. How many stocks are responsible for 3/4 of the growth? International markets are doing well too. In fact, I think Japan and Europe are leading. You're correct. And 7 stocks are 77% of the growth right now. So keep in mind, short answer, we have lots to still pop in our accounts and in the US economy. And if you were to ask me, financials, technology, and I hate to say this, but we'll find out, and we'll find out on Friday, and energy can really shoot higher. I'm not an energy fan. I find it interesting. I find it interesting where we have those opportunities, though. Now, if you ask a liberal or a Democrat, it is, where is it? It is Biden economics for much stronger than expected growth. And really all this is because of the Infrastructure Investment Jobs Act that was put together through 2021, 2022. So I went and I looked at it. I connected into it, the Infrastructure Investment Act, and we went through all of this. And it's funny because if you want to spend quite a bit of time going through 900 pages again of stuff, this is for all intents and purposes, it's the Highway and Infrastructure Act that Mike Lee put together starting back in 2018. All of this mirrors almost exactly, and again, it's hundreds of pages. This mirrors exactly the Mike Lee Highway and Infrastructure Act that was put together through the Trump administration. It's his bill. And obviously, when you can't get the two sides that are together, then one side doesn't pass it. Democrats didn't pass it in a Republican administration, but now you have the Republicans that are passing it during a Democratic administration. And the short answer, again, it's another $1.3 trillion that's being put out there. And there are a lot of programs that are right now government funded. But it was really interesting as I spent the weekend going through this bill. It literally is an exact replica of the Mike Lee Highway and Infrastructure bill that was presented in 2018 that was shot down by the Democrats. So, not to be on a public or a political soapbox right here, but it's amazing how much more gets done when the two sides come together. If the two sides could just come together, a lot more gets done in a much quicker period of time. And it's important because, for crying out loud, all they got to do is just work together and look at how our economy fights a pretty crappy, for all intents and purposes, it's a pretty crappy economy that we're sitting in right now. With that said, earnings. Earnings this week. If we're to look at earnings this week, what would your thoughts be on earnings? Earnings this week, we have Domino's Pizza, Whirlpool, 3M, Alaska Airlines, GLW. I should know that one. Hasbro, Kimberly-Clark, Newmont Energy, Verizon, Microsoft on Tuesday, Waste Management, GE, General Motors, Google, Visa. Wednesday, AT&T, Lithium Batteries, eBay, Mattel, Valmont, Boeing, Coke, Meta. Arch Coal on Thursday, Boston Scientific, Honeywell, Hertz, MasterCard, Valero, Amazon, First Solar, Chevron, Corning, correct. Bill, that is Corning, TLW. What do you think about earnings? If you are going into earnings season, already the earnings this year is down 4.4%. Are earnings going to go higher for the S&P 500 or lower this earnings season? If you were going to make your guess on earnings, where's earnings going to come in this week? Considering, I mean, well, the earnings season, but this week is the biggest 1 week of earnings for the season. Where do you think companies are going to be? You guys are not saying anything. So kind of interesting, right? Lower fuel costs. So transportation is cheaper. Higher material costs. So the cost of doing business, nope, that's not the correct way to say it. The cost of manufacturing business is higher. The cost of buying equipment and facilities is higher than last year. Earnings going up this quarter, they going down? What do you think? It's tough, right? It's really tough to make a guess right now. Lee, what do you think? Earnings going higher or lower? Stuart, earnings higher or lower? David Decker, David W, and David, what do you three think? Higher, lower? Stuart jumps in, busy, overall flat. Lee, what do you think? Higher or lower? Dave Decker, higher or lower? David W, higher or lower? Lee Maxwell thinks it's going to go higher. Earnings will go higher. And Dave W says lower. So we're all the way across the board. In all honesty, that's the hard part. The hard part right now is during economic disconnects, some things don't make sense. You know what I'm going to tell you will happen for the next day and a half? probably next to nothing. We'll have next to nothing for the next day and a half because of two reasons, but the biggest one, FOMC rate decision is on Wednesday. We'll probably have muted earnings tomorrow, which is sad because General Electric, General Motors, Visa, Google, Boeing reports Wednesday morning. You're not going to see a movement until after the rate hike decision comes. And if we have, how would I say it? If we have a opportunity to slow or stop after another rate hike. If we get another rate hike that says, hey, we have one or two into the future, then we're in trouble. Now, Maud actually just made a comment, and there is something to make sense. GDP is 80% consumer spending. Retail, restaurants, entertainment is booming. I couldn't get into Disneyland or California Adventure here in Southern California last week. It was packed. They were not letting any more people in. But Kevin, I thought parks for Disney were going down. Well, they're going down slightly in Disney World in Florida. California, the two in Europe, packed. Higher numbers happening in China as they're opening up. But I came in with a week and a half to try to get a day in Disney. I could not get into Disney. Maud, you said travel. And in all honesty, hotels are up, but travel by airlines and so forth is only up slightly. So I would not put travel in there, even though I've done nothing but travel for 6 weeks. The numbers aren't showing it, at least in the plane flights and at least in the gas usage for a summer. I can't document that. You're not seeing a boom in hotel bookings right now either. If you took a look at Pricelines and Kayak's numbers, not impressive. Not impressive. You know, Hilton reports, when does Hilton report? Hilton reports, or Hertz reports on Thursday. I forgot when Hilton reports. I don't see it actively here in front of me. But I'm not sure travel would be into where I would say booming. So I don't know. We'll figure it out. We do have some earnings coming up this week. In fact, if we just go through, let me go through briefing. I found this interesting the last little bit here. The speed which mortgage rates rose was a halting factor for existing home sales and price appreciation. But for some perspective, they remain well below mortgage rates that stretched in the mid to high teens back in the 80s. Existing homeowners are in a reasonably good spot, even if it's not the exact spot they want to be in physically. The inference is that ongoing demand encouraged by a strong labor market should keep median prices rising and padding their home equity. The latter will remain a support for consumer spending via the wealth effect. If there's a risk to the existing market in pricing, it would be another spike in mortgage rates or a crack in the labor market that translates into a significant rise in the unemployment rate. Conversely, some relief on mortgage rates and/or continued strength in the labor market will be good for sellers who want to sell and buyers who want to buy, albeit at higher prices. So pretty interesting article. And I need to let you know the Hurley Investments website is down. If you're looking to listen to the recordings, you'll have to find those on YouTube right now. The Hurley Investments website will be down until, I want to say, August 4th or 5th. We're doing a backup and we're doing a bit of a change here. So bullish on the Dow, but we are overbought. On the S&P, bullish and almost slightly overbought, 0.02. And then the NASDAQ has plenty of room to grow. Little pullback and off we go. We will most likely have a little pullback in earnings. I'm calling for a zero growth return in July. And if you look at the S&P, if I'm saying there's a zero growth return, I'm saying the S&P will lose 100 points and finish off at 4,450. That would be my expectation going through earnings season. There will be a couple of earnings that'll knock it out of the park. I would assume the majority of earnings will fall into a bit of a pullback where we're going to remain flat for July. And there's just not a catalyst that sits there that gives me the opportunity to look at some growth coming up. I can't find the catalyst. Could it be more investment capital on the sidelines? Yes. But I just don't see the growth opportunity for this quarter. I can't come up with a catalyst or scenario other than the slowing of interest rates last month, but we kill it on Wednesday. So I'm expecting a flat 100-point pullback, which is 2%, 2.25% would be my expectation for July. A lot of earnings coming up. For us, we're going to focus on GE, General Motors, Google, L, and Visa, Boeing, Coke, and Meta on Wednesday, Ford on Thursday. Then we'll have our technology earnings that come in next week. FOM rate decision on Wednesday. We'll probably keep a cap on the market tomorrow and through till noon Mountain, 2 Eastern on Wednesday when they come up with the rate decision, and verbiage will be very important. I've got some interesting articles in here. This longtime bull is worried about cracks in the technology stock rally. Here's how Tomley expects the market to shake down. I disagree with his article. His article is taking into effect that all of the NASDAQ has been up when it has not. It's just been those 7. Here at home, no. I found a CNBC article on how electronic vehicle range is determined, what the process is flawed. Again, you're not seeing electronic vehicles get a lot of love except for Tesla. Very interesting. Winning ticket for the 1.08 Powerball jackpot was sold. Mark Cuban, what did he say the guy should do? He said, do the annuity. Do the annuity and get paid the whole amount. Out of curiosity, what is the advantage of doing an annuity? Someone tell me, what's the advantage of doing an annuity? Well, it's kind of funny because you said minimize tax. The taxes are what they are. I mean, if you take a lump sum, you get a payment of 558 million versus the 1.8. But yes, you can't lose it quickly. In fact, the advantage of taking an annuity is that you're betting taxes will be lower the next 10 years into the future. That's really what you're doing. Could be the next 20 years, but I think they pay Powerball off in 10 years. So the advantage of an annuity is you get the whole $1.08 billion, but there are some mandatory taxes held out of it. But the reality is that, one, you can't spend it or blow it all in one shot. Two, you're expecting taxes to be lower sometime into the futures. Pretty interesting. How much does one really need? I need $1 billion, Bill. The short answer is $1 billion is what people need nowadays. And if you guys get $1 billion, don't forget I am your money manager. And do taxes always go up though? You know, taxes came down quite significantly in Trump's administration. So I think taxes go up in a Democratic administration and taxes come down in a Republican. It might be a net sum zero mod, but that's just the short answer. Taxes came down for Trump, for me being a small business owner. And it helped me out significantly, especially on the payroll side of things. Here's the Biden Economics by Morgan Stanley. It'll have the link for the Infrastructure Investment Jobs Act. Again, 900 pages, pretty interesting. The bear market is dying less than, here's the $10 trillion that have come in. And I just had a billionaire, Ray Dalio, quit these 4 habits to actually achieving your goals. Becoming overwhelmed with possibilities, consuming a goal with a desire, focused on the wrong reward, and not dreaming big enough. I thought it was fun and interesting. I enjoyed this little article. I do kind of look at some of these self-helps just to put myself into a perspective. But with that said, what questions do you guys have that I can answer for you about this next week of earnings and the next week of your accounts? What questions do you guys have? The short answer is yes, we're running protection into earnings. Long puts, there are a couple we're going to go out of the money. There are a couple we're going to go in the money. But yes, protection is basically on for earnings. We don't have protection on Bank of America or JP Morgan right now. A couple people we need to get your protection back on for Disney. I see some trades that are being done by you and they're being closed out for a 0.1 or 0.2. Does that make sense given that you pay a commission? So mod, yes, you've got some puts that have run their time frame where the stocks have gone significantly higher. So what you see being closed there is probably being closed. If it's within 5 cents, the brokerage house can close it themselves. You should have had some short calls that were closed out for a profit. But yes, you also have some puts that were closed out that basically were worthless. So it's 50-50 on some of those. Do I expect lower guidance? Yes, I do. I would expect lower guidance in general with the uncertainty. Again, we're probably going to go through a pretty flat August, September, October. October is usually the worst month in the market. And we'll see if we have a Christmas rally this year, which I would expect a Christmas rally. But yes, I would expect a lot of companies were going to continue to lower guidance as the Fed continues to raise interest rates. So that's the correlation there, Bill. Ma, did I answer your question? Perfect. David, what do you think will have the best earnings for this quarter? That's an interesting question. I'm going to stay with technology. I would think our surprises that we're looking at would come from Apple, Baidu, Micron. I also think finances. So I think we're going to ride the wave of Bank of America, of JP Morgan, Visa, Square. Those are the ones that I think we'll see some movement higher on. I'm worried about Under Armour. I'm worried about retail. I worry about Disney. I would expect Disney to go down to $75. And at that point, I think we're going to, and I'll present this maybe on Thursday or next week, but I think on Disney, I think we back the truck up at $75, but I think we free up that capital. We've made great money on the way up. We've made great money on the way back down. I think we're going to free up our capital on Disney and run an out of the money 90, 150, $60 leap bull call. That's only going to cost us around $9, but offer us $60 of upside potential, and try to run it all the way out to the middle of 2025 and free up the capital on Disney. I believe in Iger, but I think we might make better money as a percentage base on a 500% return on a leap bull call. Again, a 90, 150 leap bull call will cost us roughly $9 if the stock gets down to the $75 to $78 range. So Dave, pretty interesting. Abraham, I heard energy will go up, but didn't. So it's funny. In the United States, we can be energy self-sufficient, but we have an administration that is capping. It's capping our energy and increasing the demand for it. So we're now willing to pay for oil outside of the United States at a higher price, and our reserves are historically low, and we're not refilling them with our own products. So again, this is another head scratcher. With all due respect, I'm not a fan of Biden. I do feel like he has dementia, and I don't understand all the talk of all these jobs he's created when in the energy sector and the technology sector, he's killed jobs. Powell's killed jobs in the finance sector or the banking sector. So I just don't see it. We could have had so many more jobs, but I just don't get it. Oil reserves are dangerously low. I agree. I'm shocked we're not filling it up with our own companies here. Shocked we didn't open up the Keystone Pipeline that could have given us 25% more oil to refine. Mod, the electric grid can't handle any more. Correct. The West is going through rolling blackouts. It's awful. It's really, really awful to what's happening. Yet, I thought I saw Biden's approval rating at 28% on the economy. I don't understand how 28% of the people are happy with the economy unless it's in the services sector, because the services sector has done pretty decent. You also have had in the airline industries, you have unions fighting for more money for the pilots and for the stewardesses. You had a walkout, or some of the airlines that their stewardesses went on strike. You also have the automobile industry that they are doing a new 10-year union So those industries are going to pay out more, yet the employees are doing better. Any other questions you guys have? If not, guys, have a wonderful evening. Stuart, I will call you at the top of the hour. And that gives me about 15 minutes to go get a drink. Guys, appreciate you being here. Again, I will have this posted on YouTube shortly, but the My Hurley Investment website and Hurley Investments website will be down until August 4th. I'm doing a revamp on all of them. So guys, take care. Have a wonderful afternoon and evening. Look forward to talking to you guys most likely on Thursday. Bye-bye.